Good morning, everyone. Today's date, Thursday, March 26th, 11 a.m. GMT. I'm Chief Analyst Ryan Fox here from OptionsXO headquarters in the UK, giving you today's daily market update. Let's talk about today. So far, early in the morning, German consumer climate came out positive 10.0 over forecast of 9.8. We also have negative results on M3 money supply and private loans year on year for the euro. And we also have positive gains on 0.7% retail sales month on month for the pound. Next announcements coming up are CBI realized sales. If we take a quick look, let's see if there's results came in, as well as unemployment claims happening within the next hour and a half. Okay, so British pound CBI realized sales positive 18 over forecasted 16. This is the level of diffusion index based on surveyed retailers and wholesalers. So we're looking for the actual to be greater than the forecast, in which case this is positive. So we can see a positive boost in the dollar and the pound as a result of what we're seeing against the dollar. You can see here positive 27 changes and positive 19, 20 changes on the euro dollar and the pound dollar. So dollar is weak right now, as we can see overall on the majors. Later on this evening, we have Governor Board Member Zerberg speaking for the Swiss franc at 5 o'clock. We also have a string of announcements for the yen, including household spending year on year, core CPI, as well as unemployment rate and retail sales. If we take a look at major stories happening right now, there's a few things that people are talking about. One, it's Saudi Arabia and Yemen. Currently, Yemen is under a what seems to be a civil war-like conflict between what are the Houthi rebels backed by Iran and the president of Yemen, which is backed by Saudi Arabia. Saudi Arabia being the most major oil producer in that area compared to Yemen, which only produces about 2% of oil. However, Yemen sits on pretty much the epicenter of where world oil trade exists. If you take a look at a map, you can notice that Yemen comes very close to the Strait of Hormuz and also the Red Sea. So if we see that potentially an Iranian-backed force taking over that area, it could potentially result in a direct conflict between Saudi Arabia and Iran. And this is very, very important to the oil market because right now there's a lot of uncertainty that exists in the oil market right now. We see that looks like WTI on a course for biggest week gains since 2009. Right now, U.S. stocks are actually doing very, very poorly. It's actually the longest stretch since 1994 that we've seen any back-to-back gains. And also, we have a recent terrible story coming out of Germany. Apparently, a pilot was locked out of his cockpit, which caused, is what's they're suspecting caused potentially the crash of flight Airbus A320. There's also a currency war that's happening right now between both the dollar, the euro, and also the BRICS. So we're seeing a lot of fluctuations in currencies. Home prices in the US are also surging much, much faster than wages. So we're seeing a lot of excess markets outpacing other markets. So if you can see, even by looking at this graph, the 2-year percent change of median home prices compared to the 2% change of average weekly wages, you can see in certain sections of the country like Michigan, California, Georgia, Texas, Florida, California, Massachusetts, that wages are completely outpaced by home prices. So this is a serious concern for Americans and consumers because as home prices continue to rise and wages continue to stay pretty much non-changing, then we can see a potential for a disparity in income inequality. Other than that major news, we looks like negative 300 points on the Dow, negative 30 on the S&P, FTSE down negative 76 points, Nikkei 225 down 275, and crude oil up $1.90. That's today's daily market update. I'm Ryan Fox, Chief Analyst here at OptionsXO, signing off. Happy trading, folks, and look out for unemployment claims happening in about an hour and a half for the US dollar. That could really affect some assets. As you can see so far, it's positive announcements for the pound and the euro have, reacted comparative to the dollar, which had actually negative core CPI results yesterday. If we take a look, I believe it was negative 0.4, as well as it wasn't CPI, excuse me. It was core durable goods orders month on month and regular durable goods orders, negative 1.4% and negative 0.4%, both under forecasted significantly. So we can see that because that was a significant change, which is the total value of new purchase orders placed with manufacturers, excluding transportation, that's going to hurt the dollar if there's a negative analysis. So far, dollar has been hurting, and you could see that other currencies have been taking advantage. So we see euro dollar up, pound dollar up, dollar yen down, dollar franc down, dollar Canadian down, Aussie dollar up, New Zealand dollar up, and also pound yen down. So in the next hour and a half, we see a negative unemployment claims that could possibly bring those assets even further in the direction that they're continuing. Happy trading, folks. Take care and enjoy the rest of the day.